All right. So we're gonna record this just to show you that we could pull the zones from the left side to the right side, and we just want to see what the reaction was like. See if we could have predicted the market in September till now. That's basically what we're doing. So we're gonna pull the top one first. We're gonna pull the bottom one. We're gonna pull the next purple one. We're gonna pull that one. Pull this one. And then we're gonna pull the last one right here. All right. So of course you went down a little bit lower. What we could do to compensate for that is just copy the zones like this right here. Make sure it's only the zones. And then what we could do is simply copy and paste them just like that. Now, watch this, right? Let's give it a second. Let me make sure it's perfect. Let me zoom in for a second here. I think that looks perfect. I don't know. We'll fix it later if anything. I'll just move it to the left like that so I could see where the other zones were, you know? Okay, so now watch. Look at the left side. Look at all the times it touches the purple. Right? So you gap down here, you gap down here. You still have some extra areas where you go beneath it, so I had to copy it down again. But then on the right side, look at how many times you hit the purple. You literally don't move until you hit the purple. Like, look at this. You're obviously over here, right? You hit the purple. You zap above this purple, right into the middle of here. Just like our supply and demand zones. You fall down to the quarter point. Watch this. I can even measure it right now and show you that that's the quarter point. Look at this. So look at how close that is to the quarter point right there. It's above it, so what does that mean? It's bullish. And what do you get the next couple days? Extreme pulls to the upside, you could say. Now, look at how ridiculous that is. Again, these charts were created in September. And look, what does it say right here? Possible immediate death, 5,920 to 5,960. And what did the market do a couple days ago? It fell down again. And where are you at right now? Now you're at a weaker point. You look worse than yesterday or the past couple days. Which means if the market decides to fall here, you're most likely going to fall straight right back down to this purple. Probably to this purple as well. And you might actually start getting crazy, like crazy downside here. So that's what I would be looking for right now. Something like that from all the way up here. If the trend persists, that's okay. If I'm looking at this the same way, if this gets above this purple, I'm straight up playing calls on SPX. Straight up for another $100 move or 100 pip move, you could say. Once it does that, see if it's going to pull back, just because now you're going to be on top of the immediate death area. And then, higher probability of immediate death, that's going to be when SPY hits 630 to 620. That's why I purposefully have that there. So predicting the future again, we're going to see if we could do it for another 6 months. We've been doing it since September and since the summer of last year. But of course, doing it one time is only one thing. Let's see if we could do it again. And yes, there we go. So that's kind of what we're looking for right now. Something like that. And again, just using the left side. Nothing crazy. This was the last time we traded with this. We went long down here when it was right next to this purple. And it was, yeah, it was ridiculous. You literally gapped up, and then gapped up 3 different times. And this was on January 13th, right? You guys want to see something cool? Watch this, right? That's January 13th, right? Let me go ahead and open up my documents here. Let's go ahead and go into the folder where it's, let me see. This folder, and then where is it? Short-term focus, one-on-ones, PC tutorials, no. PC tutorials? For what? How about this? Yes, timing large moves. Okay, you guys ready for this? So this is called timing. Actually, wait. There's another video that's on the 13th of January. Let me see it. 13th of January. Where is it? 125. 125. 13th of January is right here. That's the 8th of January though. How I predict the markets days ahead of time. How I predict the market days ahead of time. That's on the 8th. That's incorrect. That's not that video. World markets? No. Videos completed. Timing large moves. Spy. Silo fibs. No. It should be in this hard drive. Cash account video? Nope. Dark Generation 2? Nope. Desktop? No. Euro trades? No. Not that one either. Not that one. Mistakes. Old videos. One-on-ones. No. PC tutorials. No. You know where I put it? I think I remember where I put it. There's no way I put it here. I'm insane if I put it here. Let me see. Advanced class 112. All predictions. I was supposed to put it here and I didn't put it here. So yeah, I didn't put it here. I don't know where I put it, honestly. So what we're gonna do is we're gonna watch a video that I think it's the video that I want us to watch here. And I wanna see what you guys think. Because it was something we just talked about a couple days ahead of time. So it's pretty cool. We actually managed to talk about that a couple of days ahead of time. And we were correct about it. That made it even cooler. Alright. Where's all the videos? Unreal Engine. Let's see. View large icons. I don't even know what I just did right now. Where did all my information just go? Oh, there it is. Okay, so you go here. And then you go here. And then let's go to this one. Let's watch this one from this one. Alright, so this is before the 13th, so I don't want to show you this one. That's incorrect. So yeah, never mind. If anything, I'll just show you that video later today. I had created a video. It's most likely private then. I created a video on 13th, which was, as you can see on the screen right now, it was basically the next day. Right? This was the weekend. On the 13th, you had opened up all the way down here at a new low. So you went all the way down here to 576. When you had done that, I had told everybody, I want you... Actually, you know what's crazy? Let's see if we talk about that before you even fall down there. Wait a second. This might be even better. Okay. I don't want to talk about the past. Let me see. Yep. Let me hear it. Okay, so right there, I just basically stated that if it pulls up from here, you're going to pop towards the top. If you get above it, you're going to go straight up to the top where these arrows are, right? Again, that's what I stated here. If I look at that same chart, which was monthly DARP chart number 2, and I actually show everybody that right now. Actually, no, let's keep watching. I want to see something. Do I talk about the downside? I haven't mentioned it yet. Let me see. Okay, so I just stated right there. I said it was going to fall from here to where I just moved the green arrow to. Right? And then if we fall below that green arrow, look at what that says right there. 579.81. We're going to fall to 575. That's what I stated right here. So if we go ahead and go look at that chart now. Again, same chart, monthly DARP chart version 2. Let's go ahead and look at it. It's monthly DARP. That's not this one. That's not this one. That is right here. And then this one right here. So that's what that looked like over here. Ready? So as you can all see, when the market had fell on the 8th, let's go ahead and track it down. This is the 8th, this is the 10th, and that's the 13th. If you look at where the 8th is, let's see, did I move it? Let's see, let's catch myself. Did I move it? It's right here. It's at 580. It better be at 580. I better not have moved it. No, yeah, I didn't move it. Look at that. Look at that, everybody. So I did not move that arrow from that day ever since I moved it on the 8th when I was recording that video. And I was recording it up here. I said if it falls down to the green arrow, it's most likely going to fall down lower than the yellow line because it's going to probably be a little bit more aggressive. And when it yanks below it a little bit, we're going to buy the calls. And look where it says we bought the calls right there. You know where it hit? It hit number 4 on the reversal points. That's the funniest part, was that on the bigger scale and the reversal points, they line up with each other. So that's the reason why I can profit, 400 or 500% every single time, is because whenever we get in, we're using so many different trading styles, and we're waiting for all of them to line up, giving us the green light, the okay, and then we're hopping into the play. For example, look at the puts. If you go below 579.81, which was, where is it? Look at that, right at the close. That's wild. We said that this is going to fall to 575 and then 565. Where do you fall to? 575, perfectly. After that, you run right back up. I believe we were actually waiting for this to go down lower. We were trying to see if this was going to break down like way lower, go to like 565, but it just yanked up. So once you saw it yank up and go to 580 again, we were like, no, yeah, this is going to go right back up again. And look what ended up happening. Let's go ahead and zoom out for a second here. You get above that yellow box right there. And then once you get above that yellow box, what do? You go sky high. Straight into, where's the green lines? Where's those arrows? Did I move them? I think the arrows I moved. I'm sorry. I should have not moved it. That would have been much better. Yeah, I'm sorry. I think I moved it. Yeah, I think I probably touched it down here. Yeah, it looks like I did. But as you can see, last target of the range before we fall down to 585 again. So that's the reason why when we hit 609, I had everybody buy into puts. The only problem was I had everybody buy into the puts at like the beginning of the day. So everybody was down like 50%. We opened up the next day, everybody's down 80%. We opened up on Monday, everybody's up 2,000%. It was the wildest thing in the world. So the only reason why I predicted that was because of this right here. You went from here to here, then right back up to here, then right back down to here, then right back up to here, right back down to the middle, right back up to the top, right back down to the middle. And this is when the news with tariffs came out, and then you just kept getting shut down, right? But every time you kept getting shut down, you would hit a orange area and then bounce. Look at that. Bounce. Bounce. Wait till you hit a new area. This is the only time you didn't bounce is when you're actually crashing through the levels, right? Look at the next day. Nice bounce right here, right? Now it's holding properly on it, which means the next time it hits an orange one, it's probably going to have a bigger bounce, which I'm assuming is right around here. If I actually copy these two orange boxes, the next orange box would have been, look at that, everybody. Perfectly bounced on it now. And then you actually no, you crash below it, honestly. Go look at that after hours move. But then again, the next day, you do bounce on it, yeah. I would call this a bounce still, even though you're doing something dramatic here. And then look, get to the next one, bounce again. And now you're kind of claiming the upside. So now you're going above it, which means if you fall on it, now you're going to bounce up higher, right? Because now it's kind of like switching into bullish. So boom, you fall down, you bounce up higher right into the orange one. You wait for you to hit this orange one, then fall again. So you're waiting still, you're waiting still, you're waiting still. You're waiting still. You're still waiting. You didn't get the bounce you wanted. You're still waiting. You're still waiting. You're still waiting. And then boom. On Friday, when we told everybody to buy, you ran above the area. You anchored down. And then boom, you bounced. So, as you can see, the last best time to buy was basically over here. Right around 520. So that's how long it took the market to finally start acting normal again. That's what I want you all to understand. It took the market like 3 weeks, 4 weeks for it to actually act normal. For us to actually trade it the way we normally did for like the last year. That's why nobody could kind of understand what's going on right now. That's why nobody's profiting. It's not just a random coincidence. It's a lot of people are having times profiting right now. They almost, in fact, can't profit because of how quickly the market's just going from something we've understood to something we've basically not understood. Just like that. And then you know what's going to happen next, right? It's going to once again resume that slow flow. We're going to go back into a market that we understand, that's normal. And yeah, right now we're just going to play with the market though. Have fun while we can. Now we could do cheap trades. Just like how at 3 o'clock, we're about to get into another cheap trade. I'm thinking we might get into another put play, but knowing how annoying this is, it might just want to pull up higher, and then tomorrow we could probably get into the puts towards the end of the day. Like a cheap one. But no, yeah, if you do yank down here, you're going to fall down massively. So, we could look for a cheap put right now. Like a 586 put. It's not a bad idea. 586 put for a 0 day. On Friday, this put cost $800, and right now it only costs $4. So let's actually look at another put, maybe 2 days out. Maybe we'll look at another put, maybe 6 days out as well. So let's look at 6 days out first. 6 days out, we have a nice put for 580 at 140. So if we just fall down, right back down to the bottom and reset at the structure, again, this contract's going to go from 140 and you're going to go straight to around 240, 260. So you're going to be up almost 100%, you could say. If not, you might be up way more than 100%. I might be undercutting it a lot. I tend to do that, by the way. Most of the times when I give you guys a prediction, most of the time, unless I'm saying it's an extreme prediction, most of the time, again, I'm giving you kind of like a very safe estimate, you know? Like whatever you could make, I cut it into a quarter and I only tell you that much. Which is usually why when the market does something extreme, nobody understands it. Is because the way I have you guys play this market is to only take a quarter of it. That's why it's consistent. It's not because we're doing something that's impossible every day. It's because we're waiting for a certain move and a certain range to be established. And then once we wait a couple days, we kind of find it out. And yeah, we play the range, but we only play a quarter of it every time. Because it always like wicks up and down at least a quarter. That's what it's daily normal. Like kind of, it's daily norm, you could say. So yeah. Look at how the market's reacting off of number 6. Right? Now you're getting a super point of double confirmation. Now this is the real point that you wanted. This is why I actually put this line up here. So when I first drew this line, before I moved it right here on top of number 5, it used to be up here at number 6. And you basically, now you did the move that I wanted you to do. You guys see that, right? So now this is where you would get another call for the upside. So looking at the calls for SPY, you have a, again, we're still looking at the put 6 days out, but we're just looking at a 0-day call now. A 0-day call. We could buy into a 0-day call for $5.93. It's only $4 here. And if we flick up to $5.93, which is number 8, this option would be about 1,000% in the money. Not 1,000% in the money, I mean 1,000% up, but it would almost be in the money. You would go from only $4 to around 30 each. So everybody, go ahead and buy your $5.93 calls here. Can it go down lower? Of course it can. But you're not paying attention to that. Letting fear control your path forward in terms of what you buy and sell is a horrible way to trade. It has to just specifically be about about being as precise as possible with number 5, number 6, number 7, number 8. That's really all this is about. I'm not even going to overword it. It's just the reversal points you see on my screen. Getting as close and, as perfect to the reversal point as possible. Because, you could see it, right? It's like perfectly on number 5 here. So you would buy a call right here. After, of course, it hit number 5, held on number 5, ran above number 5, then fell down to number 5. Double point of confirmation, ladies and gentlemen. Let's rock and roll. And then we could see this run all the way up to number 8 now. So if this is going to run up higher, it's going to do it right now. That's why I had you buy into a call right there. Setting you up for success, once again, you always have to do that for yourself. Make sure that when you're getting into a trade, the trade had potential in the first place. Don't just get into something randomly. As long as it had potential and it did, that's fine with me. Even if it was a loss, that's all right with me. Let's work back from there. Let's see why it was a loss. At least the core philosophy of the equation was that you knew it had potential. Now, when we actually break it down, if we find out it did not have potential, well, now you're going to be one step closer to knowing when something has potential because you were wrong the first time. So now you're going to want to be right the next time, as long as you document it, of course, which is the most annoying part. It's like bringing us back to school, But it's just something we have to do in order to get better. That's the only reason why my charts became so marked up, like so explanatory. Just fix it up, fix it up, fix it up, make it better, better, better. And that's it. You don't gotta overcomplicate it at all. So I think this is good here. I think I like the way this looks. So I've been trying to improve this all day and make sure we have the best possible chart. And I think we do have the best chart right now, honestly. I don't think there's anything else we need to improve right now. Got that copy from that day, got that copy from there. That's right here. Alrighty. Let's put this over here now. Let's also copy this and save it into our desktop. Today is May 27th. Save the picture. Let's go ahead and exit out of this, paste this here, post this here. Okay, everybody, so you had the 588 level. You have the 584 level. We're just going to wait for the market to open up tomorrow, but you already have all the levels. It doesn't matter what level this market opens up at. Because of us posting these levels every day since you ran up. Because, again, we stopped posting it on the 21st, which was pretty much after you had hit the high already. Now I'm posting it again because you might resume the high and go up higher. If we just continue to fall down, I'm still going to post it, of course, to show you the change, but I want you to pay attention to the fact that you already have what's necessary for you to be successful. You already have all the levels. So let's say if the market opens up at 567, all you gotta do is go back to the chart that I posted on May 9th or May 7th or May 8th, and you're most likely gonna get the levels to trade then. So like let's literally test that right now, right? Let's look at May 9th. When did I have post this? That was a little while ago. May 6th, May 7th, May 15th. So I had a jump from May 7th to May 15th. So May 7th, I said 559 to 563. May 7th, 559 to 563. So yeah, we were down here. So even if you fall down here, you already have those levels done and already made. It's just you would have to open up at the same level, which is 559. That's the only problem. That's why I'm telling you that I'm still going to update it every day for you, because it might not have the same opening price, which means that up and down from open, it's going to be different, of course. So, yeah. But until then, your calls are obviously up. Let's say if you got a call that was only 2 strikes or 1 strikeout, that's always what I would suggest to most of my members here, right? That's the only thing you should do, is get something as close to being in the money as possible, because then you could just sell it for 5-10%, give you a double point of confirmation, and that's really all you need every day. You do that every single day with $300, 5%. Let's just say you do that for 60 days in total. By the end of those 60 days, you would have basically almost 1,000% gain. Now let's say if you amp this up and you're getting 10% per day, that gain is going to jump so much. I think if I could guess it, it's probably going to be like 30,000. Let's check. 16,000. I was wrong. So what, 15 would give you 60,000? That's going to give you way more than 60,000. 100,000, yeah. So it's kind of wrong. Somewhere in between, right? Maybe if we amp up the days to 90. But I think at 60, we should leave it at that. So if you just have $300 and you get a 15% gain every day, which is just like a move, just like that right there. Just like this right here. Showing you a whole different chart was also correct about it. So if you just played with a whole different chart here, again, you would have been correct about us running up here and running up into the middle of the supply and demand zone. Or if you had one of these charts, again, middle to the top of this area, and now you're consolidating by 580. Or not 580, 588. You're still above it, right? Like $2 above 588. But that's basically the major level that you're needing to hold right now. So since you're above it, we're just going to play for the next major area, which is going to be 593. And then once we hit 593, we could sell out of all the 0-day plays. Of course, you could probably sell it before then, 5, 10, 15, 20%. Or just wait for it to hit number 7. That's also another idea. Now, if it never gets above number 7, that's a problem. We've seen it happen some days. That's one of the reasons why I told everybody in the morning, the fact that you fell down that much and ran up this much, by 1 o'clock, 12 o'clock, the day was already done. So I wouldn't have put any more capital into the market had I had missed the first 2 trades, basically. Today was one of those days where it was only one direction down, and I kid you not, just one direction right back up. And now you are tilting, right? Look at how you're hitting the EMAs. You went from hitting only the pink one to now hitting the green one to now hitting the blue one to now in between the blue and purple. So you are curving right now as we speak for more downside, but that's also a point where you can apply more pressure and start running up higher. Because remember, this is the first time we hit in between the blue and purple zone, which is a golden pocket. It's a really good area to buy a call. That's also something else that worked out in our favor. While you're on top of number 5 as well. It was kind of like both of them were in the same area. And that's all you're looking for. Just waiting for your charts to line up and then just doing what it says you to, or tells you to do, which is just either buy or sell or double point of confirmation, stuff like that. Alright, so I think that's pretty much everything I wanted to go over. I just wanted to show everybody how us just using this one chart right here from September and me copying and pasting it onto SPY, it basically helped me create one of my strongest trading styles right now, which is the consolidation zones. So this style right here was completely made from SPX. So you could do the same thing. Trade Apple a little bit, see how you trade Apple, and then bring what you learned from Apple into SPY. Obviously, SPX is going to be much closer. So I would stick to SPX, I would stick to ES, or I would stick to SPY only so that you could trade all three of them at the same time. Think about how amazing that is. Just with learning one name, you could trade futures, you could trade Forex, and you could trade options and stocks. Just learning one thing. You could do all four. So that's, of course, your best interest right now, is to learn that one thing that's going to kill all four birds with one stone. All right, ladies and gentlemen, if you fall below number 5, you know what the deal is. Markets are going to fall from the sky. We've been waiting for this all day. We want to see if the market's going to fall down to 580 again or run up to 596. Anything in between, I'm not dealing with it. There's going to be smaller people playing the market. It's going to be more consolidation, more annoying price action, less spontaneous moves, right? More draining of contracts, more theta, more IV crush. So let's just wait until this thing resets on the weekly, and then let's trade it again. And again, this is what makes you not overtrade, is understanding the structure. Because the structure is not telling you to trade yet. It's telling you this is only for the small fish. Of course, you tend to get big fish buying in like a smaller fish area, right? So like days like today, it tends to get very explosive because you just have a bunch of smaller buyers nibbling, buying, not really moving the market. And then you get a complete, kind of slamming of certain types of just buys and sells. And once that hits the wire, which tends to be at around, closing time when the market has already closed, they tend to do it when the market is not active because of options. Options, their value moves so quickly that if options let's just say they were able to allow you to trade options after hours, what would happen is the structure of this market would change. Because when options get moved in terms of a stock price, it's going to cause a greater squeeze. So like, how you get gaps overnight? If people could trade that, and like you can get gaps overnight and people could literally sell their call or put at like 4 a.m., what's going to happen is those people are going to then buy it into the calls. And you know what's going to happen, right? They're going to shut down the market even more. So if they actually allow people to trade 24 hours options, it would cause this market to get way more crazy than it is right now. Like it would be in consistent chaos. Like now we actually have some breathing room is what I'm trying to say. Which is good. I don't think that we should want them to turn this into 24 hours. We have Forex already, we have futures, we have a bunch of other stuff, crypto. At least if this is our main breadwinner, it could remain as something like this. So I'm telling you guys, it's not going to be a good thing when they turn this thing 24 hours. We're going to probably have to sit down for like a month or two and relearn the market again. So from here on out, everybody, remember, you're holding your call for 593. You're not getting rid of it. That's why I told you to buy only one. Of course, the value can be drained and it could start losing everything. But that's why you're waiting. That's why it was only $5. Also, remember, SPY already did the main move today. I told you guys at 12 o'clock. So any move after 12 o'clock, you would have not basically traded this market because the main move is already done. Everybody got that? The main move was already done. So because of that, there was no point for you to put any extra capital down. So don't feel bad if you don't have a trade today. Paper traded, if anything. Hop into a 0-day trade right now. One strike out from the money. Make sure it's a call. The reason why I say that is because you're above number 5 still. So let's just say we fall below number 5 right now. I would then tell you, all right, if you fall below number 5, you could play puts to number 4 and then number 1. which that's puts down to 589, as you can see. And then number 1 is at 586. So again, if you get below this white arrow, you can play puts to the orange one, and then the orange one down here. If it holds, you're playing calls point blank just to this one area here. So this is what's so awesome about this. You can have two different groups of people who are focused on puts and a group of people who are focused on calls, and they're both making money that day every single time. That's the most mind-boggling thing about this whole entire trading game, is if you just focus on one side and you get really good at entering into puts on that one side, it then teaches you how to become exceptionally good at entering into the calls. So you hyper-focusing on one topic allows you to learn all topics equally as good. It's awesome. Nice and slow, everybody. Nice and slow. All right, give me 1 second. I'm going to take a little break here. 1 second. I'll leave the charts open so you all could experiment. You all could write your notes. And we're going to improve this today. So we're going to add some more rules. So get ready for that as well. Still tilting downwards, ladies and gentlemen. Still hold on number 5. And it is now 337. Like we stated before, we may just want to drop after hours. So we're just going to wait for it. If we continue to run up above, once we get above 593, same thing like this morning. Calls all the way to 596 and then 597. If we fall down and we're below 580, or let's just say we're below 590 tomorrow, we're just going to play puts to 585 and then 580 flat. That's like the main, retracement. But like we stated before, if the market's going to run into a new high, it's going to happen now. So we should see this thing run up overnight. Maybe today it's not going to continue the momentum, but we could definitely see it continue overnight. And if we don't see it continue overnight, boom, straight into playing the downside, right below 590, which is where we're currently at. So again, nothing has changed from this morning. And even more crazy, nothing has changed from Friday. We already talked about the market running right back up. We talked about buying calls at 580. So everybody's already up over the weekend, massively, of course. At least for those of you who got the swings below. If you didn't buy any swings, you're just waiting for the weekly trend to reset. There's no more trades. That's it. So if you're trying to get some crazy 5-10 day plays, there's no more right now. You're not going to find nothing. You can force it if you want. In fact, if you see me get into a 0-day trade, I do suggest you get into a 5-day trade. Because for me to get into a 0-day trade, it means that there's potential. Which means that the 5-day to 10-day trades have even more potential. That's how I would look at it if I was you. So how's everybody enjoying their day today? How's everybody doing? Today was a really nice day. Again, you just continued the trend from Friday. Remember that. So there's nothing for us to do right now. We're just waiting for that to finish. And then once that trend finishes, boom. Hop into the aggressive downside, just like how we had hopped into the downside at the morning, right? In the morning when you had ran up to number 3. Hopped into a nice downside play right there. And you didn't get that reaction going straight down, so you just wanted to go up higher. So you could do that tomorrow if you want. Try trading with only $5 at first to test the flow. And then when things are a little bit more understandable, just try trading the other contracts. But trade the weekly contracts whenever you're trying to day trade. Don't trade 0 days. Let me hear it, Beast. What you thinking? Because it's definitely going to help out everybody else. I have a feeling I think I know what you're going to say. I've been waiting for someone to say something. It's like a little... I'm trying to throw in the Easter egg without saying it. It's kind of crazy. Like, it's actually kind of crazy. And it actually stems from a movie, believe it or not. The reason why I was able to do that, it's completely because of a movie. Like, I'm trying to copy something the movie did. It's a Marvel movie, by the way. I don't know if anybody has ever seen this one segment. I forgot what movie it was, but Have any of you ever seen Vision versus Vision from Marvel? In terms of, if you watched it, do you understand the complexity of conversations and how if you have two very bright minds with infinite intelligence and infinite wisdom, of course, infinite intelligence and wisdom are something you learn, right? So it might not both contain it at that moment. But let's just say you have two smart individuals going head to head, speaking just truth and only truth. What occurs is it's like this weird miracle of growth, I would say. Meaning the conclusion of those two bright minds headbutting each other in terms of their perspectives and how they view the world, it's able to turn both of their perspectives into something that was much greater. Because again, they're truthfully stating how they feel, how they think, what they know, and they're not hiding anything. So there's two truths is what I'm trying to say. And with these two truths, you then gain vision, is the idea. Because you're able to see both sides of the coin. You're not just stuck in your own perspective in how you think. If I said that this area is the best area to buy a weekly contract, technically at the same time, it's the worst area to buy a weekly contract. Yin and yang, right? You got a reaction, or you got a cause, and then you got a reaction, right? Something causes something to occur, you then get a reaction, and then you continuously get reactions on that one reaction until it dissipates, and then you get a new cause, right? A new cause for chaos, a new cause for the market to run up, a new cause for the market to get shut down. And then in the midst of it, it's doing that weird sideways price action that's hard to trade. So that's kind of like the main concept of it. That's why I did that today, Beast. Was because I told you to buy puts, and at the same time, I'm telling you there's no more puts that you can buy at that area. So I'm trying to see what people are going to do here. Which truth are they going to pay attention to, and which truth are they going to kind of hold on to so that they can learn quicker? Of course, one of those truths is going to give you a loss. The other truth is going to give you a profit. So you have to choose the right one. If you choose the wrong one, it's going to be one step closer for you to choose the right one next time. Just don't put too much capital down. Now, if you need to make money, let's say, right? Let's say if you're in a position or in a situation where you need to make money every single day, it's a dire situation, let's say. First thing I would tell you is pay attention to the weekly DARP. So this DARP that I updated today, pay attention to this right here, because what this says is right below 601, this is your first entry for puts. We played the puts the other day, and you already fell from that area. So if you're playing puts right now in the weekly, you're basically stating that you're fine with the market also running up to 601, is what I'm trying to say. So that's the reason why last time when we fell from the sky, I only bought one play. This time, what I would do here is I would only put in like $20 to $30 into the downside, logically, and then I would wait for the market to run up to 601, and then I would start buying my weekly plays again, just in case. So from here, I would only buy a cheap weekly play, like $30, maybe 3 days out, maybe 4 days out. And again, that's off of the 5th and 4th reversal points. So you're still playing reversal points, right? But the idea is that you already fell from this area, Beast. So the market might not want to fall from a lower area, from an area you just fell from. You might want to push up higher before you actually fall. So logically, the only thing you can do right now is a cheap put, or just straight up don't touch nothing. Just leave it alone. It's not worth the learning experience. Or at least it's always worth the learning experience. Let me not say that. it's always worth the learning experience, but I don't want this to be a trade where you're putting 2, 3, 4, 5,000 into, you know? I would only want you to have done that when I had called out the weekly plays a couple days ago. So when you see me be like really aggressive with it, where I'm just like, all right, everybody get into a play, then make sure you get into those plays all the time, because they're going to be able to profit or help you profit what you would have made in 1 to 2 months. So you're going to make like 2,000, 3,000 off of one trade, and then you're going to wait like a week and a half, 2 weeks, and then you're going to get into another trade. That's how I want every single one of you to trade. I don't want you making money every day, because for you to have done what I did requires you to give up everything. And I really don't think that a lot of individuals here are fine with giving up everything. And when I say everything, I mean everything. Relationships, family, you had to give up everything if you're trying to get to the level that I'm speaking of. If you're not fine with getting to that level, which I know for the most part 80%, 90% of you are not fine with that, you're not going to be able to deal with that emotionally, right? If you're not, then I already have a nice formula for you to grow with, where it's still going to be consistent, still going to allow you to grow, but you're just not going to become great. And that's pretty much all. So the question is, do you want to become great or no? If it's no, again, just have a surface level look at everything and then just don't improve. Just keep trading with that. Eventually, luck will be on your side, I guess, if the universe loves you. But if you're sick and tired of luck and all that BS, and you want to have this right now, you want to do this yourself, you're tired of the world doing stuff for you and you being in that passenger seat, hop in the driver's seat, and I'm telling you, document everything. Don't rush nothing. Even if you know that it's a nice point to buy, when we have other trading styles and they tell us something else, we have to pay attention to it, because then we will never take a loss ever again. That's what I'm trying to train us to do right now. Never take a loss again. Because if I'm trying to take you guys to $1 million, you cannot have a loss where you're losing 20% of your account. You can't have a single loss, I'll be honest with you. That's the craziest part. I want you all to truly understand that. When you're growing to $1 million, you cannot have a loss. Because most likely it's going to smoke you out the park. And you're never going to be able to compete with us in terms of growing at that same pace. So, don't rush it. This is nothing to rush. We're all trying to get to the same level at the same time. We have to be as real as possible, be as truthful as possible. Are you dealing with something? Because if you're dealing with something outside of this market, I would tell you that right now, with the type of attention and the fact that you need to give up everything for this in order to get to that level, you're not going to get to that level. So it's either you kind of ignore the market right now, fix your personal situation so that that's not bothering you no more, have at least a week to 2 weeks of you being able to have time, take a week off from your job if you have time. I'm telling you, it's worth it. But I will only say it's worth it if you're actually going to do something with it. Remember, I had 60 to 80 people I had to kick out this Discord, even though I know them for over a year, even though I'm really good friends with them, even though I care about them. I had to kick out around 80 people. Maybe 70. It was a little bit less than 80, actually. But yeah, it's for them. It's for them. I can't keep them thinking that they're doing something right when they're not. So if they didn't do something right, and I let them know of that 6 months in advance, and they still continue to perform the same mistakes, now they're going to have to be forced to learn it, or else they can't be here no more. When you have an environment like that, you not only touch the stars, you not only touch the moon, you not only touch the sun, you touch the whole galaxy. You touch every star that has ever existed. That's kind of what we're trying to do here. We're not just shooting for the moon. I'm not just shooting for the sun. I want everything. I want it all. Why? Because it's my God-given gift. I deserve it all. That's what he told me. And I believe he told every single one of you the same thing. So it's time to stop worrying about the fear and the anxiety of all this devilish stuff that's occurring around us, and it's time for us to grow. That's the only thing that's left. And how do you do that? You do that by not forcing yourself to buy at certain points when you shouldn't. You know? Just don't force nothing. If you're going to buy something on the weekly, the reason why you're buying on the weekly right now, like for instance, if anybody else bought a weekly trade with Beast, it's a pretty good idea. Why is one of the truths a good idea? It's because if you crash from here and collapse, you're going to go right back down to 563. So beast mode is going to make the most out of everybody. If the market collapses right now, beast will make the most out of everybody, 100%. If the market runs up, beast might be down 30%, 40% by the time we hit that next blue circle above us. So that's kind of like both truths at the same time. I hope that makes it make sense. I hope I didn't say something, stupid. I hope it was as right as I wanted it to sound. Sorry if I said something earlier and I had you guys do something you shouldn't have done. Next time, you're going to inherently know not to do it now. So you're going to know when I tell you to do something. And again, I'm not just speaking of beasts. I'm speaking of everybody else. Whenever you get into a play and it goes against you, don't feel bad. Just document it. Let us all know what did you do to get that loss so that I don't have to get that loss. Maybe you're going to have a loss that I never had, right? That could be the case. Especially if you're trading different names like SPY. Trading QQQ or Tesla. You could definitely see something crazy. So, for the downside, but if the market is resuming the trend from Friday, then I abandon ship until it reaches exactly. Yeah, so right now, because you're not at 596 Beast, what this basically means is that the market was just being a little bit more dramatic than normal. And if it's not going to run up to the next high, you're most likely going to fall right below 588 and then fall right back down to 580 again. That's what that tells me. So anywhere below 588, we're falling to 580. What do you guys think about what I spoke of the last couple minutes? Was it confusing? Do you want me to go over certain parts of it? Or does everybody understand both truths and how you could have applied it? You see how you're still holding on number 5 and you're still getting bought up? There we go, culinary. And Beast, let me know. Let me know if you kind of see what I was going with. It's not a terrible. Don't feel like it's a terrible play. Like Beast, like you did something that it's above average. It's way above average. That's an awesome play. Point blank, that's an awesome play. 100%. It's just, it could be better. You could wait for tomorrow, or you could wait for like 2 days from now and then enter into a better trade. Anything you're going to trade today should just be 0 days or something really cheap, just because we're not at that big fish level. We're at the small fishes. Once we hit the big fish level, then boom, then the real explosion is going to happen, and then your contracts are going to really go up. And that's kind of what I want to wait, setting you up for success, because IV normally increases once you actually hit that magnet level. Just like how it increased basically going from down there to up here. So Mansa, you said you got into a call, or you got into a put off of number 5, and this one is for 610. So boom, we have another individual, 610. That is for June 10th. So that's for 2 weeks from now. That's an excellent expiration. And then your contract is for, you got a 570 put. That's a 570 strike price. You paid 189. So let's go look at the 570 strike prices real quick. Let's see how far that is on the DARP. So on the DARP, 570 is basically right where we almost hit last time. So if you just fall down to 580, your contract will most likely go up to around like $310, $400 before you even go in the money. So when it hits 580, I would suggest, Mansa, just get out of it. Just head for the hills. Everybody that has puts right now, if we open up at 580 tomorrow, get out of it, please. Because that right there is an awesome play. Remember, the trends are compressing right now. Compress, 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 compress. Did you run up as much as you fell down the last couple days? You did not. So that means the trends are moving smaller. So if it falls here, it's probably only going to hit a higher level than where it hit last time. You get what I'm saying? So you're playing for the puts for this to fall down to somewhere in like here. Like right in here. That's really what you want this to do. And then if it falls down and you have a month of expiration, I mean, hey, I wouldn't blame you if you hold that one put for this to fall down to 540 or for 563. I wouldn't blame you, honestly. You have enough time. See what it does by next week. If next week we're not at 5, if next week you're not in the money, I would say sell it. Sell it with a week of time so that you don't lose too much value. And every time you're about to sell your contract, just make sure you have a couple days left. Never sell your contract on the last day. You're just going to kill too much value, and at that point, you might as well just day trade it. So that's how you consistently trade weeklies. That's how I would do it, honestly. And like, think about it, Mansa. You got off of a put on reversal point number 5, right? So look at how awesome this is. You're down $18, and the trend is above number 5, which means it didn't get shut down above number 5. Let's say if you bought it earlier today, that's even a bigger bonus. So boom, let's just say you bought it right here the first time it hit this area. You bought a put on number 5. Now it's instantly holding on number 5. So now you're holding on it, and you might go up higher. So the next time you're going to average down is going to be at number 8. I'm kind of enjoying this month, so I'm not going to lie, because I know the market's taking you through the ringer right now with these 4th and 5th reversal points. It's doing the same thing to everybody. So this is awesome. Remember, this is going to be the best way for you to learn. The universe is doing this for a reason. Always think like that. So, yeah. Monster, you're basically waiting for tomorrow. You don't care about the price action today or tomorrow, because if the market runs up, you most likely will run up to 596 and then maybe 601, 605. And once you hit 601, then you can average down on those plays. So again, you're not going to average down till you run up $11, is what I'm trying to say. You're not going to average down when you hit number 8. Okay, now the market's rocketing right there. So for those of you who got into a call right at number 5, as you all can see, it still did work. However, from you first falling into it and then basically just jumping up, it didn't work because it killed too much value. You all see that, right? It only started working again at the last couple minutes of the day when the momentum got reapplied to the market. So without any momentum, you're just going to kill value, kill value, kill value, kill value, kill value, and then you snap. So I hope today was a really good day for everybody. I hope today was really chaotic. I love how you all put only one option each. So I'm really liking that. That was a really good idea, Mansa. Same thing with you, Beast. If you bought one option, that makes that play way better. It makes it even better than I said before. So that's what's up as well. Make sure you're just trading with one option. Once we get to those bigger levels, then we'll trade with like 4 or 5, 6 options. And then we'll start smoking the market the way we should be. Not in this random, sense. Because like I always told you, not every day is a day where you trade a 0 day. Not every day is a day where you trade a leap. Not every day is a day where you trade a 5 day. Every day is actually all planned and predictable and already meticulously laid out years ahead of time. And I have that layout. I'm just not giving it to everybody. Not yet, at least. Because once you can actually see how I built it, and you can see all these Easter eggs that I'm giving you, I want to see if you could build something better. Because if I straight up show you how I structured everything in terms of all your yearly buys, again, it's going to ruin the fun for you. So, because it is a treasure hunt. Truly, it is a treasure hunt. This all is a giant treasure hunt Finding the best trading style that makes you profitable. It's the funnest thing in the world, honestly. It's like finding a hidden ship that got, sanken 100 years ago in the middle of the ocean, and we're trying to find it right now. And remember, everybody, tonight at 9:30, 9 o'clock to 9:30 today, we're going to have a little meeting with everybody from the Discord, and we're going to start chopping up the DARP chart every single night. Because if we do it every single night for a month straight, I won't have to have you look at the charts for 6 months. I kid you not. If I just have everybody do this for the next month straight, from here into June, you're not going to have to look at your charts until the next year. Maybe even past that. Because think about it. All my charts are done for 2035. All my charts on SPY are done until 2035. 2034, 2035. Anything past that, I'm not trying to predict because I feel like that's too much. That's too... The probability is way too low, and I don't like giving myself a low opportunity to do stuff. When I'm doing stuff, I like it when my probabilities are high. Of course, I'm like everybody. But then when I really like to do something, of course, having a low probability of success does make it a little bit more kind of awesome and chaotic and fun. So it does kind of make you go above and beyond. It does, but not all the time. You don't want to be stressing yourself out, So for the most part, like baseline, I just want to be able to go above and beyond and be able to succeed just like that. And then when I actually try, I want it to be like something like straight out of a movie. That's how I would say to arrange the charting. So right now, everybody, we're basically acting as if we're in a movie right now. Imagine. We got camera crews behind us. We got 1 million people watching right now, maybe even 1 billion people watching. And everything we do matters. Every step you take, every option you buy, every idea you say and lay out, it all matters. Start operating like this, and let's see how much better we could do than just today, right? That's what I would say. Act as if you have a camera crew behind you. And imagine, like, everybody's in their own job, right? We got Johan fixing cars. We got Culinary fixing cars, and that's his job, right? We got AC doing his stuff. We got Beast Mode doing his stuff. We got Monza doing his stuff. We got Frost doing his stuff. Meech, Sherman working his job, right? And imagine, at the same time, everybody's working their side jobs. They have, like, a camera crew behind them that's just recording them. Seeing what they're going to do next. Are they going to be able to do it? Or are they not going to be able to do it? Every single one of you have the same significance and same importance as I do in terms of this whole entire learning process right here. So just start thinking of it like that, Start thinking of it like that. Everything matters. I want to take you all to the next level. And I think that'll be all for today. We're done with today. We got nothing to talk about. We'll hop back on later tonight at around 9 o'clock. From here till then, I'm just going to be fixing up everything else. And that's it. Like I said, the SPY charts, they're done for the next couple of years. So that's why now I'm having a little bit more time on my hands. I don't really have to look at this stuff no more ever again. So the only thing I want to do now is Tesla. That's my main priority. Because once I finish Tesla, I can confidently say that, no, yeah, within a month, we'll hit 1 million. Without Tesla, I don't think we're going to hit 1 million in a month. I'll be honest with you. From $5 to 1 million in a month without Tesla, I don't think so. Maybe. But my brain is telling me no. My brain is telling me we need Tesla 100%. Especially for those $20,000 to $40,000 plays. All you need is one play on Tesla, 20,000, and you're at 200K already. Now you have 10 other opportunities to get into the same type of trade on Tesla. You do it one more time, you're already at 400K. You put the whole amount in, you're already at 2 million from 200K. 20K to 200K, then 200K to 2 million. 2 trades. Just 1,000% each. How do you get a 1,000% trade on Tesla? Let me show you all real quick. Just off of the charts I have already, which are bare bones, not too amazing or anything like that. But if I just look at this Tesla chart right about here and I go on the 1 hour, as you can all see, you hit a circle where it says 60 to 180 to 360 to 720 day calls. So before you even fell down here, we had this all laid out. As you can see, I had this one laid out. We entered into this one. We took a loss here. That was $300 we took a loss on. And then we entered into a call here. We made that $300 and then we just lost it because we entered into a call right here and the market wanted to fall lower. And then we entered into another call down here. And then this is when I stopped focusing on Tesla. Is once we entered to that other call down here, and then look at that. You ran from 212 to 90, right back down to the floor, perfectly hitting something, right? Now you're holding. Now you're blasting up. And like we told you all last week, if Tesla's going to continue to run up, it's going to go up to that next area right up there at the top. So let me actually show you Tesla here. So again, everybody, it runs up, consolidates, runs up, consolidates, runs up, and then consolidates, right? Somewhere over here. So it's going to consolidate around 410 again, is what the market's already telling me. Just because you did it here and you did it here. And you kind of did it down here a little bit, but not really. So yeah, that's all I'm looking at right now. Which means that if we get to this top circle up here, just like Tesla fell from the top, because I told everybody Tesla was going to crash. Nobody believed me, right? If they did, everybody would have sold out of their shares and rebought it. That's the only time I would ever say to resell your shares ever again. Besides that one point, I will never tell you to resell shares on Tesla. It was just because of how quickly and dramatically fast that trend was. Like, it was just way too dramatic. You just shot from the bottom straight to the top. You just doubled. That means everybody who was playing long term, they went up like 16 to 20 times. They made all the money that they're going to need for the next 5 years. I promise you. That's why I knew they were going to tap out. It just made sense. And then everything fell right back down to 212 again. Or not? Did it fall down to 212? Or I think it fell down to 215. Yeah, 215. And then right back to 290. Right back to 330. 350. Now we're running to 380. 400. And then we're going to collapse again. Going right back down. To like maybe... Let's see if I can predict this perfectly. You ready for this? If Tesla runs to 460 and gets shut down, I promise you Tesla's going to fall all the way down here to about 160, 170. So again, if Tesla falls down at 460 and you collapse, you might fall down to 160, 180, right down here. That's what you were supposed to do last time. Since you didn't, and you ran up higher, to me it means that Tesla might actually go up way higher. So if you go up to 520, same thing goes. You're going to fall down to 4 or to 180. Equal reaction. That's all this is. You fell down from up here, fell down straight down to here on the opposite side, the extremity side, right? Now you're going right back to the extreme side. Once you hit the extreme, you're going to fall right back down to the middle again, which is where we're going to play the puts to. And then once you do that, we're going to see if the market